All right, what is up, traders? What's up, tycoons? Lots to talk about in today's video. We're going to break down gold. I'm going to give you guys my honest thoughts and opinions on the gold market right now. GLD saw its highest call volume since March. Lots we're going to break down. We're going to go over the GLD chart, obviously. We're also going to pay attention to the gold futures chart, and we're also going to take a look at GDX. Now, there's a lot of different pictures being painted right now in the gold market, and I'm going to break all of them down to you guys. And if, in my opinion, you're trying to trade gold, you need to pay attention to all three of these. Okay, you need to pay attention to the GLD ETF, the gold futures, as well as the GDX. This is the gold miners ETF. All right, and I'm going to break down why in today's video. We're also going to take a look at the relationship between the dollar and yields. All right, now this is very important right now because yields in the dollar have been extremely bullish. Okay, and we're going to break down why that's important. So in summary, we're going to take a look at GLD, we're going to take a look at the futures, we're going to take a look at GDX, and then we're also going to break down the dollar and yield relationship. So be sure to smash the like button, subscribe to the channel if you guys are new. All right. As always, the content provided on the channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the full disclaimer. I do want to mention I started a completely free newsletter giving out free, valuable finance content to you guys. All right. And I try to sprinkle in some free trade ideas in there every single week. All right. At least one or two free trade ideas. This was one on Tesla a few weeks ago, going over some of the conditions that we were looking at. You can see that that trade played out very nicely. If you trade options, that was a very profitable trade. All right. Also, things like energy. All right. This was on ExxonMobil back when it was at 111. It ran up. Had a significant move to the upside here as well on ExxonMobil. Okay, but not all trades are bullish, right? Some are also short ideas and short trades. This was one on SWK, Stanley Black and Decker. Clear rising wedge here at the moment, showing signs of breaking down. And, we gave some of the price targets for that one, and you can see how that short trade played out here as well. All right, so if you guys are fans of free, valuable finance content, all right, as well as free trade ideas straight to your inbox, sign up for that completely free newsletter. It's a great way to support the channel, support me growing my brand, while also helping yourself getting some free content, okay? Now, I do want to mention I started a Ko-Fi page on here. What you can do is you can click on commissions and you can request a specific YouTube video on whatever it is, right? If there's a specific sector or a ticker that you want me to analyze and break down, maybe it's a strategy tutorial. Ko-Fi is the way to now request those, okay? There's too many comments. I've dropped too many videos to filter through all of the comment sections. This is a great way for you to reach out directly to me. All right, and I can see it. You can also come on here under the commissions page and book the one-on-one sessions now directly through Ko-Fi. Okay, so you don't have to email me anymore for them. You can come directly here and you can book a 30-minute or 1-hour session directly through the Ko-Fi platform. As well, if you enjoy the valuable content that I put out here for free, you can always click the buy a coffee button and you guys can leave a tip or donation via that Ko-Fi platform. Now, let's get into it. And right here, GLD saw its highest call volume since March. Now, if you're not familiar with options, calls are bullish bets that whatever you're betting on is going to go up. And so we're basically seeing the highest volume in bullish bets on GLD that we've seen since March. Now, of course, March was the banking crisis, so it made a lot of sense that we saw people going into things like Bitcoin, gold, as well as other things as well. But really, really interesting to me right now. And what's interesting to me is that after we saw that, GLD has continued to go down. Now, we're going to do a little bit and speak about waves here. Okay, when I refer to waves, I'm speaking about Elliott wave theory, and typically on Elliott wave theory, markets tend to move in 3-wave and 5-wave structure. So your 3-wave structure is going to be a corrective move, right? So that's why it's labeled as an ABC here. And so after we got our bullish 5-wave up, we're looking for an ABC correction. All right, so it's been following the analysis pretty well here. Okay, after our A wave down, our B wave up, and we extended lower and hit our C wave. And ultimately, if we stay below 173.16 here on GLD, we're really bearish below there. Okay, that is our major level. If you break below here, and really once you stay below the 61.8% retracement level, which is 177, the odds of you getting a 100% retracement, aka a reversal, increase greatly. So we're really at the last leg line of defense, whatever you want to call it here at 173.16 for GLD. All right. Now, when we say bearish below here, what we mean is it has to stay below here, okay? If it just comes down, consolidate, and then comes back up, that's what's known more of as a look below and fail. Now, what has me cautious in the gold markets right now are these boxes, okay? These blue boxes, right? So what these are these are gaps on the daily time frame, and these tend to fill about 90% of the time historically in the market. The big question is when, right? When do they fill? So if you take a look, the initial gap that we filled down was back here in March, right? We talked about March not seeing call volume that we haven't seen since March. Look at what was happening in March, right? This is the whole month of March right here. Very, very bullish, right? I mean, we're coming down from 168 and rallying all the way up here to 185, 186. So really a tremendous move that we saw in March based on the high call volume. And what are we seeing? Well, we're seeing high call volume here right near our buying point. Okay, because after you get this 5-wave move up and you get your ABC, you would be technically looking for your next 5-wave move to the upside. And we're seeing a lot of buyers step in, at least in the option market, via call options. So that's what's really interesting to me. The things that you have to be cautious of and know your risks of, again, are these gaps down, right? We finally filled one of the gaps down from March that was all the way over here. And remember, I said the big question is when, not if they're going to fill. And it took a substantial amount of time for this gap to fill, right? So the beginning of March, we have this gap, and we don't fill this gap all the way here until the end of September is when we came down and finally filled that gap. So it's very possible that if we stay below 173.16, we're definitely going to come down and fill this gap. And if gold really reverses all the way back to the downside, there's a gap all the way here at 152.10 to fill, okay? Now, GLD isn't the most bullish chart that I have on gold, but I'm showing it to you guys because of the gaps, okay? These gaps are not present on the gold futures chart, okay? And this is because futures trade on a different time schedule, right? They're available for trade for more hours, and so the gaps necessarily aren't going to be there as they would on the ETF GLD. Now, gold futures, following the analysis very well, okay? Again, looking for that 1, 2, 3, 4, 5 to the upside. We were sellers up here. We were buyers down here, right? Simply because of just basic technical analysis, right? To make things very simple, resistance, resistance, all right? And we knew that this was an overhead supply zone, resistance again. We also knew that this was our wave 5 target for the 5-wave move to the upside. Made a lot of sense to take profits here, okay? So we took profits there. We had the pullback, all right? Entered into long positions here on the A wave down, looking for the B wave up. All right, took some profits up here, expecting a C wave down. And now we've completed what seems to be like our ABC. And if you take a look at the gold futures, it's holding its retracement levels very well here, right? It hasn't actually broken down like GLD has, okay? When you talk about the gold futures. So the gold futures look a little bit more bullish. And there's a flashing buy signal, right? I mean, there's a piping red hot flashing buy signal right now, okay? And I'm going to show you guys. We have, all right, oversold here on the daily time frame. What do we see? Move up. Oversold here on the daily time frame. What do we see? Move up. Oversold here on the daily time frame. What do we see? Move up. Oversold here on the daily time frame. What do we see? Move up, right? Oversold here on the daily time frame. Move up. Oversold here on the daily time frame. Move up. Oversold here on the daily time frame. Move up. Guys, I sound like a broken record. Oversold here on the daily time frame. And we're also hitting our C wave targets after getting a 5-wave move to the upside. So we basically have two things right now, in my opinion, telling us to buy gold. Now, I haven't bought gold yet, okay? I'm not sure if I am. And the reason being is that GLD chart, all right? So at the end of the day, you have to trust your analysis. And my analysis is telling me that this is a good opportunity to buy for a swing trade, right? Now, the swing trade could take a week to play out, all right? It could take a month to play out, all right? You have to set, a timeline. You have to manage your risk accordingly via your own conditions, your own standards. But being that, we were looking for an ABC to the downside, we came down to our C wave targets here, and that we're back at these oversold conditions where we know historically, we've seen rallies in gold each time that it's come down on the daily time frame on the gold futures back to these lows. Okay. So to me, it seems like there's a really good argument to buy here, okay? And the only argument not to buy is that things could go lower and GLD could potentially fill this gap. And of course, GLD is going to be, you know, relatively trading the same as gold futures. And so if GLD is filling its gap down, it's very likely that the gold futures are going down lower. Okay. But when you look from a risk to reward standpoint, and, you know, let's just try to draw some horizontal lines here. So, you know, let's say you're risking this much right here, okay, and you're looking to capture this move, and, you know, currently we're right here. From a risk to reward standpoint, you know, it looks pretty favorable, right? You're risking about this much to potentially make about this much, right? So, you know, that's about a 2-to-1 or a 3-to-1 risk to reward ratio. Those are the type of favorable ratios that you want to look for. Okay, so you know, I'm gonna be making a decision here soon on gold. Let me know your guys' thoughts down below. Okay, the video is not over, but I want to know, just based off these two charts alone, do you think gold is going higher? Is now a good time to buy? What type of strategy are you going to implement? Are you going to use the futures? Are you going to do some type of option strategies, right? Are you going to sell, you know, are you going to sell options? Are you an option seller? Are you going to put on an iron condor here? Are you just going to buy an ETF? All right. One thing we have to pay attention to is GDX. Now, this is a weekly time frame, okay? We've been looking at daily time frames here. I want to show you guys the weekly because there's a very clear head and shoulders right here. And the reason I'm bringing up this head and shoulders is because IWM had a head and shoulders. The S&P 500 had a head and shoulders. Many charts in the stock market right now in the equity markets had head and shoulders, and they became self-fulfilling prophecies and broke the neckline. Well, look at what the neckline for our head and shoulders is right here. It's also our 61%, 61.8% retracement level at 2714 on GDX. Okay. Not only that, we have a gap down to fill on GDX, which would be the completion of this inverse head and not inverse, but this head and shoulders. So if we break the neckline here, all right, GDX is most likely going to fill its bearish gap down. When we take a look back at GLD, most likely that would result in this filling its gap down, right? I mean, you could say that this right here is a head and shoulders as well. Okay, it's very possible to say all of these things. And you know, the gold futures don't necessarily look as much as a head and shoulders, but you could draw in here something like this, right? You could say that this is your head and shoulders, okay, with your neckline being something like that. All right. So, you know, to me, it's very important to not just look at futures, to not just look at GLD, and to not just look at GDX. You want to kind of have an overall aspect of, you know, what the class is doing, what the sector of gold is doing as a whole, right? We have the miners showing a very clear head and shoulders here on the weekly time frame. Look at how many times we've tested this level. Okay, this 2714 level, right? 1, 2, 3, 4, 5, 6 times now. The more times you test a level, the weaker it gets. All right. And again, this is another one of the things here that has me a little bit cautious to go long on gold. Okay, is we have the gaps down on GLD to fill. We have a clear head and shoulders here on the GDX weekly chart. And you know, if things break down, you know, it's very possible that gold can continue to head lower. All right. Now, to me, the safer trade would be on GDX, okay, specifically waiting for a break of this trend line. If we can get a clear break rebound, right, and let's say we find support here, or let's say we even dip down below and then we get our breakout, a cleaner and more textbook trade, in my opinion, would be waiting for a breakout on GDX, look for the breakout or retest, and then the move higher. Okay, that's going to be your very textbook entry. So the best trade right now may be no trade, and it may just be sitting on your hands. Remember, cash is actually a position. You don't always have to feel the urge and the need to force a trade and always be into a trade and always have an opinion on the market, whether it's going higher or lower. Sometimes it's better to wait for clarity and wait for direction. And that's more the standpoint that I've been taking on gold. Now, here's a bullish case for gold. Now, it may not seem bullish here at first, but when you take a look at TNX, all right, and this is going to be our measurement to look at yields, and when you take a look at the dollar, all right, obviously measuring the dollar index right here, the Dixie, and you take a look at gold, look at how well gold is relatively held up. Okay. And what I mean by that is you can see that clearly they have an inverse relationship. So as yields are going higher here and as the dollar is going higher here, you can see that overall gold has fallen. But when you take a look, I mean, gold really consolidated, right? It really consolidated sideways through this period here and until recently broke down. Okay. Meanwhile, in this period where it was consolidating, right? So let's draw this for you guys. So, here we were having a lot of sideways movement in gold. And what was the dollar doing? Well, the dollar was going higher throughout this whole period, and the 10-year treasury was going higher throughout this whole period. So, the reason I say that this could be bullish is because if the 10-year starts to go down and the dollar starts to go down and start a downtrend here, it's very possible, okay, that gold could actually be ready for a breakout to the upside. And we could break that trend line that we're looking at on GDX, and we could get that bounce at the C wave where we're looking for the bounce on gold futures as well as GLD. All right. Now, these are a lot of ifs. All right. But these are some of the things that you want to consider. All right. There's no clear 100% path on anything, but overall, in my opinion, these are going to be the main things that you want to pay attention to right now if you're looking at gold. Okay. And this is basically why. Now, if yields continue to go higher and the dollar continues to go higher, this is going to put more downward pressure, right? And you can see really here that that gold really started to feel the effect, okay, of the dollar going up and yields going up. So, if those continue to go up as gold has continued to go down here more recently, all right, that's going to seemingly put more downward pressure on gold and maybe cause that head and shoulders pattern to play out. Okay. So really, obviously there's two scenarios, right? We go up or we go down. So if you're bullish, you want to see us hold the C wave bottoms. Okay. You want to see TNX go down. You want to see the dollar go down. All right. That's going to be what you're looking for if you're bullish on these things, right? And you're also going to want to see that buy indicator on the gold futures daily chart. You're going to want to see that kick in. Okay. We've already seen massive amounts of call volume in GLD that we haven't seen since March. So we're setting up right now a storm to potentially go bullish, right? There's a lot of cases to say that, hey, this could be a short-term bottom. But trying to time the bottom is how a lot of people get burned and how a lot of people quit trading, right? They look at all these things and they say, "Oh, well, we should have went Y higher here." That daily oversold indicator on the RSI has always been a good swing trader over the past year indicator. Why didn't it work this time, right? No strategy, nothing is ever going to work 100% of the time. So, for the bears, right? For the bearish case, right? Basically, your C wave is going to break down. We're going to break through that C wave. The GDX head and shoulders is going to play out. Yields are going to continue to go higher. The dollar is going to continue to go higher. These are the things you want to pay attention to right now when it comes to gold. Let me know your thoughts down below. What are you guys trying to play? Are you trying to play futures, GLD, or are you trying to play the miners with GDX? Do you guys think it's going to go higher? Do you guys think it's going to go lower? Don't forget, all right, actually, I started that free newsletter. I want to remind you guys of that. It's really, really good. I'm not spamming you guys with BS, or I'm not spamming you guys with a whole ton of affiliate links, just trying to, send you emails and get you to buy stuff. It's just free knowledge, guys. It's really good, free, valuable content that I put out completely for free, giving you guys trade ideas in there as well. Okay. And just going over things that I think is important as an investor. I cover metals like gold. I cover energy. I cover commodities. I cover the bond market. I cover the stock market. I cover crypto. I pay attention to all of these things, right? And this is my passion. I'm obsessed with all of these things. And I plan on, doing this for 20, 30, 40, 50 more years in the future. Okay. And I'm very young into my career in finance right now. And you guys can just be a part of me along that journey, okay, and grow with me, and just basically gain from the knowledge that I'm learning, that I'm putting out to you guys, and what I've learned in my time in the markets, over the past years that I've been trading, and just diving deep into everything.